Good afternoon, ladies and gentlemen. Welcome back to the channel. My name is Liam, and this is Young Money Investing, where we help everybody, no matter how young or how old, achieve true wealth in their lives. It's Sunday afternoon. It's time for another weekly technical analysis. I greatly enjoy doing these. I have a lot of fun. I really enjoy technical analysis. I mean, I will sit here and kind of look at charts all day. I just really enjoy it. So I hope you guys are really enjoying it too. And if you are, go down and smash that like button and then click the little button right next to it that says subscribe. Click that one too. And yeah, go do that. We'll go ahead and jump into the charts here. Okay, so we are starting off on the daily chart for the DXY, the US dollar index. As you can see here, we have broken below this blue line, our 50-day moving average. Zooming in a little bit, it looks like we're trying to reclaim it, so this might be a false breakout. So if you are trading currencies and you are looking to short the dollar, I wouldn't go ahead and do it just yet. I would probably wait for a break of this 109.54 level. Seems like it would be a better opportunity. You also kind of have this, it's a little support line going across, which I'll draw out here for you guys. Yeah, right about there. You can see that's a pretty good line. That would be a pretty good place. Other than that, you can see that we have broken below it. So this is a pretty serious candle too, not like this little doji candle back here, or this one even back here where we barely even close below it. So this might be a little more serious for the dollar this time around at least, which of course is good for asset prices. So with that in mind, moving forward, as we get into the markets here, as well as my trade of the week, we are going to be looking for some more bullish opportunities. So let's go ahead and jump into the Russell. The Russell is looking pretty good, still on the daily time frame. We did reclaim our 50 moving average, which was the interaction that I wanted to see play out last week with pretty much all the markets except for the Dow. I wanted to see how they were going to interact with that 50. Were they going to reject off of it? Were they going to break through it? We did break through it. We broke through it with some gusto. Ended up closing fairly solid. We closed on Friday again plus 2.29%. So really solid closes on Friday these past couple of weeks. But coming back into the markets here, very strong close. You can see we broke through it, kind of retested, held it, and then this really strong close on Friday. So the next test for us is going to be this pink line, this 200 daily average. Coming down, about to smack right into price action. So that's the interaction that I'm going to be looking at this week, as well as the top of our channel here at 1923. So reclaiming both of those, I would potentially start to look for some more intermediate swing trades in a bullish direction. But until then, just kind of keeping an eye on it, being patient. We are still in this channel, so that's definitely the first thing we have to get out of. Jumping into the NASDAQ. NASDAQ looks a little different from the Russell, in case you can't tell. We did not reclaim the 50 moving average. Still just kind of trading along the bottom of our, I'll zoom out to the weekly, of our triangle here. Still really just trading along the bottom here. You can see that we are kind of being supported by the 200 weekly average, which is probably why we're moving up. But going back to the daily, we do have the 50 and the 200, as well as our descending trend line coming down here. So NASDAQ, I'm not really sure where it's going. We're getting really close to the intersection of these two lines here. So something has to give one way or the other. That's kind of the thing about triangles is, when they intersect, like at one of these trend lines has to be broken by price action. They can't both stay intact. So I am very interested to see how that plays out specifically. Jumping over to the Dow looks phenomenal. I don't know what's going on with the Dow. Over the past, I'm actually going to zoom out to the weekly time frame. I mean, you can see these are some really impressive candles the past 2 weeks, plus 5%, plus 4.9%. So we really came down to this support line here and just bounced off like a trampoline, essentially. We are coming up to the 50 weekly average, so that's an interesting interaction. The other thing to note, one thing I will point out, we are building a triangle on the Dow as well. So not quite as steep, but I would like to see it actually works really well with this 50-week average. It actually works really well to, you know, these lines are acting in influence with one another. So I wouldn't be surprised if we saw some downside on the Dow this week. So that's pretty much it for the markets. We'll go ahead and jump into my trade of the week. And this week we are looking at John Deere and Company. Ticker symbol is DE. So a couple of things. We will start with some lines here like we always do. There, we'll take that one. And that one. Okay, so John Deere has been in the trading range since about February of 2021. So almost 2 years now, it's been in this trading range. You can see we had a false breakout to the upside, almost immediately followed by a false breakout to the downside. And now we're moving back up very, very close to the top of this channel here. So a couple things I'm looking at. Number one, false breakout to the upside, followed by a false breakout to the downside, followed by another breakout to the upside. To me, just kind of says that there has to be some bullish sentiment here. That's genuinely, you know, it seems logical to me. We are following this trend line. There's only 2 touches on it, so I really wouldn't put that much faith in this trend line just quite yet. The other thing I want to highlight is you actually have to go back. We'll go here. We'll go bam to here. Going back to November of 2017 until July of 2020, it was trapped in a very similar trading range, and you can see we had false breakout to the upside, immediately followed by a false breakout to the downside, moving right back up, and then we just blasted off until we get where we are right now. So look, past performance is not indicative of, you know, future results. However, there is a great quote, I cannot remember who said it, but it says that history doesn't repeat itself, but it often rhymes. Is this the exact same structure that we saw over here? No, absolutely not. There are differences. There has to be differences. This is, you know, this channel got broken in, you know, July of 2020, and this is 2 years later. The markets have changed. It happens. But is it similar enough? Absolutely. I mean, breakout to the upside, breakout to the downside, breakout to the upside. With those words of wisdom, thank you guys so much for watching. I really appreciate every single one of you. If you made it this far, go subscribe. What's wrong with you? You know, go subscribe. Show me some love. And you guys have a phenomenal week. I love you all. Peace out.